Li Auto is the best of the three big EV upstarts in China. So they delivered a beat on revenue and net income. They also raised their revenue expectations. They expected to deliver potentially up to 33 billion yuan in the third quarter in revenue.
What's happening with electric vehicle companies in China? You won't believe it, but there's been some serious trouble. An American company even had to step in to help. It was said that one of the biggest EV manufacturers there had $1 billion issue. In other news, Li Auto is seen as one of the biggest success stories in the Chinese EV market over the past few years. It's believed by investors that the company has exaggerated or even lied about the demand for its vehicles, especially its brand new impressive electric car. Investors think the company has been saying demand was much higher than it really was. Li Auto, one of the biggest three EV makers in China, is well known. If you haven't heard of them, the big three companies are Speng, NIO and Li Auto. These three companies are considered the biggest electric vehicle makers in China. Of course not, they're not even close to being the biggest. It's just that for some reason they have been the most talked about and well-known companies. But they are not the most successful. Among Li Auto, NIO and Speng, Li Auto has sold the most cars and lost the least amount of money. It has been the biggest success story. When it introduced its new EV, which is considered phenomenal, it was noted that the design isn't very appealing. However, it's probably the best one out there. While watching a video about Speng's new electric vehicle, it was noted that it's a van, an MPV. It doesn't look good, but it is the most purpose-built and logistical vehicle. It's probably one of the most incredible cars ever made. It's amazing in its own way, a force to be reckoned with. However, people ain't buying it because they don't like how it looks. Investors are expressing concerns about Li Auto's sales performance. Li Auto has essentially misled consumers about the demand for their vehicles. It's true that Li Auto did hype up this vehicle, claiming there was a huge demand for it. It turns out the vehicle has actually been a bit of a disappointment. It's expensive and doesn't have a very appealing design, although it's shaped really well for aerodynamics. But people aren't happy with how it looks. As a result, investors are now saying the company misled them. Li Auto is responding by stating that the allegations are baseline. According to a report from a local media outlet, it was stated that the company would do its best to protect the rights of shareholders. Another local media outlet also covered the class action lawsuit. Similar class action lawsuits are common in the United States, so Li Auto shouldn't worry too much. It's something that happens often in the US. I'm not sure if that will help them. Li Auto unveiled the Li Mega on the first day, which is actually its first fully electric car. On November 17, 2023, during the first day of the 2023 Guangzhou Auto Show, Li Auto unveiled the Li Mega and started taking pre-orders for the model. Before this, the company's previous models were all plug-in hybrids. The Li Mega was put up for sale at a starting price of $77,600, making it the most expensive vehicle from the company. It's also the largest and offers a lot of range. The Li Mega comes with impressive technology, including incredible 500 kilowatt charging speeds and a range over 700 kilometers on a full charge. During the pre-sale and official launch, Li Auto's management highlighted these features. The company was very confident that the Li Mega would be the top seller among models priced above $75,000, regardless of energy type or body style. However, in my opinion, we think Li Auto must have realised at the time that it was unlikely to happen. The truth is, large SUVs or MPVs that resemble SUVs, like Speng's new electric MPV, but vehicles that look like SUVs sell much better than MPVs that resemble vans. People aren't really interested in that now. Some buy them, but it's not the biggest segment for the vehicle sales. So Li Auto claims that being fair to investors wasn't really possible because they would have needed to break out of their marketing segment and convince people to. Li Auto would have needed to redefine the entire industry with this vehicle because realistically, this type of vehicle isn't the best seller in what they were claiming. We can see where Li Auto is coming from. They thought it was a revolutionary vehicle, but investors are thinking, hang on a minute, you told us this vehicle would be selling tens of thousands, and the demand is much lower compared to what you said it would be. That's what investors are saying in an interview with local media. One of the company's executives had said that Li Mega would aim to achieve monthly sales of 8,000 units after its launch. However, that didn't happen. The Li Mega received a lot of negative comments instead. There has been a lot of criticism, especially about its style, and initial acceptance has been much lower than expected. Li Auto has lowered its delivery forecast for the first quarter to between 76,000 and 78,000 units, down from over 100,000. We don't think so. It's unlikely to meet the guidance now because this vehicle hasn't gained much sales momentum. As a result, Li Auto's US traded shares dropped by nearly 8%. Since March 20th, its shares have been down 21% as of March 21st. Investors are saying they've been misled. Are they correct? Well, honestly, if you're an investor, you need to do your own research and due diligence. You shouldn't expect this to be a top-selling vehicle when MPVs have never been popular. Maybe the Li Mega could boost sales, but as an investor, we don't think it's fair to blame the company. You have to research and understand the market dynamics for yourself. You are responsible for your investment decisions. Even if a company claims it will achieve huge sales, don't rely solely on their promises. Lordstown Motors and Alpha Motor Group are examples of where they made big claims but didn't deliver actual results. Claims have been made that there are pre-orders for 80,000 vehicles that don't exist and probably never will. It's not advisable to invest in these companies. They're unreliable. They are misleading investors by talking about pre-orders. Investing in a company based on pre-orders can be risky. Look at what Nikola and Lordstown Motors said about their pre-orders. It's a cautionary tale. Li Auto isn't involved in fraud, as they produce real products. Look at what Ford said. They claim they had over 200,000 pre-orders for the F-150 Lightning. But where did they all go? They seem to have vanished. Now, don't misunderstand us. The F-150 Lightning is still being sold, but it's not being sold to those who place pre-orders. Instead, Ford is selling them to customers who are walking in and buying cars off the lot. So out of those 230,000 pre-orders, whatever Ford had said, more than 90% of them have been cancelled. Anyway, you can form your own opinion on that. Li Auto's first quarter vehicle sales did not meet analysts' expectations, as deliveries of its first all-electric car fell short of its own targets. The Chinese automaker reported vehicle sales of 24.25 billion yen for the first 3 months ending March 31st, which is 32% increase from the previous year. However, this was below the 26.71 billion yen that analysts had predicted. The company's net income for the first quarter was 1.3 billion yen. According to a statement from Beijing-based Li Autos on Monday, May 20th, analysts had predicted a profit of 1.6 billion yen based on data. Prior to the Mega, Li Auto's lineup consisted of extended-range EVs that used a petrol motor to charge the batteries. The company's first quarter gross margin was 20.6%, similar to what it was a year ago. Li Autos also projected second quarter revenue of between 29.9 billion yen and 31.4 billion yen, which is significantly lower than the 38.6 billion yen analysts had anticipated. In addition to disappointing sales of its new van, Li Auto is facing increased competition from new entrants in China's EV market, such as Huawei Technologies and Xiaomi. The company is also dealing with a tougher price war as automakers try to maintain their market share amidst a slowdown. Local media reported earlier this month that Li Autos has initiated job cuts affecting nearly 20% of its workforce, which may be over 5,000 employees primarily in sales, human resources and assisted driving. These layoffs follow similar actions by rivals NIO Inc., which reduced its staffing by 10% last year. Li Auto's US listing shares dropped by 14% at 10:21 AM in New York. The stock had fallen 34% this year as of May 17th. Why do you think they manipulated the market sentiment? Whatever the case is, we can clearly see that the EV world is shaky, and it's only just a matter of time. This will define what would happen in the EV world eventually. Let us know what you think about all this in the comments. Bye for now.